You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 16th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We actually do. Hold on for me 1 second. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. That's reserved for members only and those who are taking the 1-week free trial. If you have not taken your 1-week free trial and you would like to do so, simply go to mytradingiq.com and right at the top of the page, it says 5-day free trial, no credit card required. Click the link, fill out the registration form, hit submit, and in most cases, same day, we're going to get your desktop set up, we're going to get your indicators indicating, and then tomorrow, your 5-day trial will actually begin. Now, you might say, gee, I better wait till Monday. No, don't. Because here's the deal. Even though tomorrow's Wednesday and that's your first day and there's only 3 days in a week, the trial is for 5 consecutive trading days. So this weekend, you're going to have access to the indicators, and there are markets that trade over the weekend. But those 2 weekend days, Saturday and Sunday, do not count against your 5-day free trial. So if you signed up today, and we get you all set up today, which is always our goal, your trial will begin tomorrow, Wednesday, Thursday, Friday. You'll have access to everything Saturday and Sunday, but it won't count against your trial. And then you'll have Monday and Tuesday of next week. So never worry about the day of the week or the weekend or the hour of the day that you sign up for the trial. You'll always get 5 consecutive trading days, even if it stretches over a weekend or even a holiday. Okay? All right. Now, do me a favor. When you fill out that registration form, before you hit submit, double check it. Make sure you filled everything out properly. Because if you don't, because it's an automated process, we won't get it. And if we don't get it, then you don't get the trial and nobody wins. But if you fill it out right and we get it, you will get the trial, and that could change your life. Everybody wins. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute union break, and we come back at 12 noon Eastern for this broadcast, the afternoon broadcast, which, by the way, unlike the live training room, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. I'm going to give you the best way first because you only have to do it once. Go to mytradingiq.com again. But this time, scroll down the page to where it says Afternoon Broadcast. Click that link, fill out that just simple 30-second registration form, and you're done. Not only will that log you into our platform instantly, but going forward, every trading day, you're going to get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from your desktop, but you still want to join live. And there'll also be days when you're just busy doing something and you can't join live, but you want to get caught up later. Guess what? You can do both of those via our YouTube channel. Now, it's very easy to remember our YouTube channel. youtube.com/CFRN. You've already got the YouTube part memorized, so all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, of course, you're not going to watch them all, but pick some days at random. Watch a little bit, fast forward a little bit, watch some more. Jump to another day, week, month, year. Watch a little bit, fast forward a little bit. You get the idea. Now, obviously, the more recent broadcasts are going to be more relative to what's happening in the world and in the markets right now. But you have an immense library there. Lots of teaching and training in it that will help you. And again, it's open to the public. Like I said, everybody, everywhere on planet Earth with an internet-connected device. Our daily schedule, we always try to begin at 12 noon Eastern. I've gotten better at that lately. Then we open with our daily devotional, word of prayer, share a little news with you. Then I get into a recap of the alerts, both Logic 247 and the Concierge Trade Alerts. Now, typically about 12:45, 12:50, Michael joins us and gives us a recap of what happened in the live training room this morning, each morning. And then, when he's done with that, we go live on the TradingView platform and do some live trading for 30 minutes. Then I come back, finish the recap of the alerts, and wrap things up with our good word for the day. All of those things are going to happen. However, Michael's arrival is going to be just a little bit delayed. He had an appointment out of the office. So instead of showing up about 12:45, 12:50, he'll probably show up more like 1:10, maybe 1:15. But he thinks he's going to make it by 1. So, now that you know how we roll, let's get going. The topic of our devotion this week, which we just started yesterday. Now, this is a 5-day devotional. So if you missed yesterday, you can always go to the YouTube channel, youtube.com/CFRN, and get caught up. The title is The Recall of Heaven. Today's scripture is Psalm 139, verses 1 through 16, and I'll be sharing with you from the Message translation. Beginning in verse 1, God, investigate my life. Get all the facts firsthand. I'm an open book to you. Even from a distance, you know what I'm thinking. You know when I leave and when I get back. I'm never out of your sight. You know everything I'm going to say before I start the first sentence. I look behind me and you're there. Then up ahead, and you're there too. Your reassuring presence, coming and going. This is too much, too wonderful. I can't take it all in. Is there any place I can go to avoid your spirit, to be out of your sight? If I climb to the sky, you're there. If I go underground, you're there. If I flew on morning's wings to the far western horizon, you'd find me in a minute. You're already there waiting. Then I said to myself, oh, he even sees me in the dark. At night, I'm immersed in the light. It's a fact. Darkness isn't dark to you. Night and day, darkness and light, they're all the same to you. Oh yes, you shaped me first inside, then out. You formed me in my mother's womb. I thank you, high God. You're breathtaking. Body and soul, I am marvelously made. I worship in adoration. What a creation. You know me inside and out. You know every bone in my body. You know exactly how I was made, bit by bit. How I was sculpted from nothing into something. Like an open book, you watched me grow from conception to birth. All the stages of my life are spread out before you. Days of my life all prepared before I'd even lived one day. And that was Psalm 139, verses 1 through 16 from the Message translation. Remember, God has placed a recall on your life to remind you of His goodness. God is not the one who condemns you. The enemy is the condemner. God is the forgiver. Remember, you were created by the great I Am. God wants you to remember that He knows your heart. Stop questioning if God knows your pain or hears your cries. He created you. He knows your heart intimately. Remember how He was there during your parents' divorce? How He was there when you felt unwanted? How He delivered you from death and the enemy's attacks? You may be limping on one leg, but you're still here. Not because of anything you did, but because it pleased Him to place His hand of blessing over your head as that bullet whizzed by. He carried you through the pain, and what couldn't kill you made you stronger. There is a recall from heaven because many today are not answering God's call on their lives. Many are running away, making excuses, shirking their responsibility. One thing is certain: God's call will always be written in your book in heaven. It's up to you to reflect on what is written in that book. No matter where you go, how deep you fall or disobey God, His mind is set to seek you wherever you hide. You can never hide from God's Spirit. Remember, He knit you together in your mother's womb and created you to answer His call on your life. Everyone on earth has been called to something. No one was called to show up for no purpose. Heaven has placed a recall on your life because God did not create John to be stressed about finances. Tiffany was not made to worry about her image. It was never intended for mothers, fathers, and young people to fall into depression. Into every one of us was placed the joy of the Lord, who is our strength. I can picture God telling His angels, "Put a recall on John. Call him back to a place of worship, trust, and faith. I put a calling on his life. Why isn't he fulfilling it? Why aren't you fulfilling the call of God in your life?" The call is not to meet in a building, but to be an agent of change to everyone you come in contact with. Join me in a word of prayer. Heavenly Father, we come before you in awe and wonder, reflecting on your profound knowledge of us as revealed in Psalm 139. You searched us and known us. You understand our every thought and know our every move. Thank you for your intimate involvement in our lives, for forming us in the secret place and ordaining our days before we even took our first breath. Help us to live with the awareness of your constant presence and guidance. May we find comfort and strength in your everlasting love, knowing that we are fearfully and wonderfully made by you. It's in Jesus' name we believe and pray. And everybody said, amen. Well, amen and happy Tuesday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 583 points, 1.5%. The NASDAQ is down 60. S&P 500 is up 14. And the Russell 2000 has just been unbelievable for the last 3, maybe 4 days. The Russell is up 49 points right now. Again, that's over 2.25%. We've never seen a move in the Russell like this in the history of the markets. I haven't anyway. Maybe you have. In the commodity basket, crude oil is down $1.01, trading 80.90 last. That's a drop of 1.25%. Gold up $35.40, trading 24.64 last. That's a gain of just shy of 1.5%. And silver is up 49 cents, trading 31.42 43 last. That's a gain of over 1.5%. Or, as some might say, $2,500 per contract traded. In the Asian markets at the close, Nikkei posted a gain of 84 points. Shanghai rose 2 points. The Hang Seng fell 287. That's over 1.5%. And in the European markets at the close, FTSE down 18, the DAX down 72, the CAC down 52. No movers, no shakers there. So we had a mixed day in Asia. It was a red day for the UK. Not a big red day, but well, it's red nonetheless. And we have the one thing here in the US that we don't like, mixed markets. We like to see all four of the major indices the same color. Now, we don't care if they're all green or all four red. Because when the four are traveling in the same direction, that's when you get the greatest follow through on your trades. Now, because the NASDAQ is down only 61 points, by the time this broadcast ends, it could join the other three and be on the green side of the street. We'll check back in on this before we're done. Okay, off to the news. Gold hit a record high as hopes for Federal Reserve rate cuts grow, and some traders ramped up bets on a second Donald Trump presidency. Spot bullion rose as high as $2,462.54 an ounce at the time this article was written, moving past a previous all-time high set in late May. The rally comes as signs of slowing inflation in the U.S. fuel speculation the central bank will soon start lowering interest rates. High rates tend to be negative for gold, which bears no interest. Even so, the metal has still soared nearly 20% this year, supported by large purchases from central banks, strong consumer appetite in China, and demand for safe haven assets amid geopolitical tension. A recent uptick in holdings by exchange-traded funds is also aiding in the upward momentum. Optimism about U.S. interest rate cuts, as more economic data supports the case for a Fed pivot, is also supporting gold. Gold is poised to keep its positive momentum going amid the current global geopolitical and macroeconomic landscape, while central bank demand is expected to grow as well. On Monday, Fed Chair Jerome Powell said recent data had given policymakers greater confidence that inflation is heading down to the central bank's 2% goal. And traders now see 2 quarter-point rate reductions this year. Traders have been adding bets that there will be 3 cuts this year, after Goldman Sachs said conditions were ripe for easing, with a solid rationale for officials to lower rates as soon as July. Gold's latest rally isn't necessarily unexpected. In June, Metals Focus predicted a fresh record this year, while earlier this month, Citigroup said its base case for gold in 2025 is between $2,700 and $3,000 an ounce. And there is one more factor. They're calling it Trump momentum. Investors across markets are also weighing the growing likelihood that Trump will return to the White House as his candidacy gains momentum following a failed assassination attempt over the weekend and the dismissal of a criminal case against him. A Trump presidency could have both potentially positive and negative impacts on gold, according to an analyst over at UBS. It may lead to tax cuts supporting a shift to equities and eventually limiting faster rate cuts, he said. Still, tax cuts would also impact U.S. fiscal balances, potentially weakening the dollar's status and pushing buyers toward safe haven assets such as gold. Now, not everybody agrees with that theory. We'll get to that article in a minute. Goldman Sachs is working on raising a Middle East-focused fund and hired a longtime J.P. Morgan Chase banker to run it. The Wall Street Bank has held talks with investors in the region about raising money for the open-ended fund, asking, well, the people who provided this information, of course, asked not to be named because the information isn't public yet. I guess it is because I just said it, right? Okay. Talks are ongoing and the fund's final size hasn't been decided yet. A Goldman spokesperson declined to comment on the fund. With the move, Goldman joins a raft of rivals across the industry in raising Middle East-focused funds. That marks a shift for the giants of the asset management industry, who've long flocked to the region to court sovereign wealth funds and raise money that they would then use to invest around the world. Now, under pressure from the sovereign funds, they're increasingly looking to raise that same money and deploy it within the region. Brookfield Asset Management, for instance, has explored raising separate pools of capital to invest in the Middle East, while Investcorp Holdings, the region's biggest alternative asset manager, has announced it will set up a $1 billion investment vehicle backed by Beijing's sovereign wealth fund that is meant to invest in companies across the Persian Gulf as well as China. BlackRock Incorporated is seeking to invest in the Middle East backed by a $5 billion check from Saudi Arabia's sovereign wealth fund. Some of you may be old enough to remember back in the early 2000s, late 1990s, early 2000s. It's been a while, but the hottest trade in town was anything in Russia. Oh my goodness. If you're not old enough to remember it, you should probably Google it. It's an interesting story. And then, of course, Russia fell out of favor. Second quarter profits at Bank of America fell 7% from a year ago as its consumer operations wrestled with higher interest rates, but it was able to churn out more investment banking fees and trading revenue. The divergence between the businesses at Bank of America that serve Main Street and Wall Street reinforced a dominant trend this earnings season for the nation's biggest financial institutions. Now, I want you to key in on that word investment banking. Okay? It's going to become a real hot topic here in the near future. Higher interest rates and elevated deposit costs. Did you know that Goldman Sachs, an investment banking firm, on average has less than 5 losing trading days a year? No, it's not rigged. Come on. That would be wrong, right? The strength and earnings power of our leading consumer banking business is complemented by the growth and profitability of our global markets, global banking and wealth management businesses. That's from Bank of America's CEO. Bank of America's net income fell to $6.89 billion, which was slightly better than expectations, while rising 3% from the first quarter. Its total revenue of $25.37 billion rose slightly from a year ago. The key measure of lending revenue, known as net interest income, fell more than 3% from a year ago and more than 2% from the previous quarter to $13.7 billion. So in other words, let me just break it down for you. Maybe I could do one of those Venn diagrams. They're taking your money to make themselves a whole lot of money, and when you walk in, they just give you the side eye. What do you want? Oh, he's not in. I'll wait. Security? Yeah. No fan of banks here. Now, I just gave you the bullish argument for lower interest rates. But I said there's a different opinion out there. The International Monetary Fund said today that global inflation is expected to come down more slowly in the second half of the year, raising the prospect of interest rates remaining higher for even longer than anybody expected. The reason? The price of services. That broad category ranges from housing and haircuts to restaurants and medical treatment. Services price inflation is holding up progress on disinflation. So the barber's got to charge $1 more for a haircut so he can afford to buy his family a carton of eggs. Well, he's got to raise the price of a haircut $6 to buy his family a carton of eggs at the store. That's bad. He shouldn't do that. In fact, he should lower his price. No love lost with the IMF, I'll tell you that. Major global central banks are still expected to lower interest rates in the second half of this year, though the pace of cutting will vary based on the path of inflation in different countries. In the U.S., traders expect the Federal Reserve to begin cutting in September, but the previous article I shared said we might see something this month. Fed Chair Jerome Powell gave another signal Monday that the central bank is nearing the time when it can start easing monetary policy, citing a recent turnaround in inflation readings following hotter than expected data in the first quarter. But he declined to offer a specific timetable, saying, "We're going to make these decisions meeting by meeting in the evolving data and the balance of risks." When do you think the last time he went to the store to try to buy some eggs or had to put gas in his own car? One last article. Donald Trump's selection yesterday. Senator J.D. Vance to be his running mate elevates a figure with long-standing financial connections that are sure to play a role in the rest of the 2024 campaign. And if Trump wins in November, Vance will instantly become a key conduit to wide swaths of the business world, from powerful corners of Silicon Valley to manufacturers he championed, both as a venture capitalist and as a senator. Now, I don't know how much you know about J.D. Vance, but years ago, about 2, I told you got to go on Netflix and watch the movie Hillbilly Elegy. Now, J.D. Vance grew up dirt poor. They survived on Meals on Wheels, and his mother used to negotiate with the Meals on Wheels guy, get a little extra food. Eventually, he was sent to live with his grandmother. Sadly, his mother was a drug addict, and it wasn't pretty. Really no father in the picture. When he was in the picture, he was not a nice guy. So, here's what we're talking about. We're talking about the American dream. Born dirt poor, pulled himself up by his bootstraps, joined the Marine Corps, fought in Iraq, and when his enlistment was up, he came back to the U.S. I forget the first college he went to, then he went to Yale, where I believe he got a law degree. Then he started a tech company, which did very well, and he became a venture capitalist. And of course, now we know he's a junior senator and the presidential's pick for vice president. Now, I could make a case for any one of the potential running mates, from Tim Scott to Vivek Ramaswamy, but I think Trump nailed it. On top of everything I just said, J.D. Vance's age puts him in the millennial group. So those young undecided voters, they now have skin in the game. And that's all the news that's fit to read. So let's jump over to Logic 247. It's our 24/7 around-the-clock E-mini alert service. We're in week 311. Over the last 311 weeks, we have issued over 17,200 individual handcrafted alerts. We've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure. And a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened Sunday night at 6 p.m. Eastern, when Valerie did the recap this morning at 7:30 a.m. Eastern, we had issued a total of 28 alerts so far this week, starting Sunday night. Now, she has a conference today, so don't expect an updated recap until late this afternoon or this evening. But I have issued additional alerts since she did this recap. So the total alert number will change, and of course the other numbers will change accordingly. But at the time she did the recap, we had 28 alerts, still waiting on the outcome of 11. That gave us 17 actionable alerts, of which 2, or 12%, would have been stopped out based on market structure and that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. With the logic alerts, you get an entry price, you get an initial target, additional targets, and a final trade to target. The purpose of those logic alerts are not so that you can just trade them and not have to learn how to trade. I know some people do that, but you know what? Man, they're going to regret that someday. Because when the time comes, they're still not going to know how to trade. Use the alerts as they're intended, to teach you how to read the chart. You take each alert that comes out, you dissect it the way I teach you in the one-on-one mentoring sessions. And pretty soon, you'll be calling alerts yourself. But just as you had to learn how to read the English language, if you're an American, when you started school so that you could read all the other textbooks, like the math textbook and the science textbook, and etc. In the financial markets, it's not words and sentences and paragraphs. It's candles. It's how price flows. It's where resistance is. It's where support is. And with Logic 247, this is where I do my very best to teach you a new language. The language of the markets. How to read a chart. Just like you read a newspaper or a great mystery novel. It is not random chaos. If it were, in the Logic 247 channel, where there's over 17,200 individual alerts, with 20% or less stopped out on a weekly basis, that wouldn't happen in a world of random chaos. That happens because somebody knows how to read the chart. And we want you to be self-sufficient. Your goal is to trade for a living. We're here to help you. Okay? You got to show up. You got to do the work. You got to ask the questions. But we're here for you. Now, once you've got it down with the logic alerts and you're able to create your own windows of opportunity. And guys, to those of you who send me your snapshots early in the morning via Telegram, where you've drawn out your windows of opportunity as you see them, and then I critique them and get back. I'm sorry that I sometimes get backed up, and often by the time I get to your message, the window that you drew and the chart you sent me, sometimes it's already filled. But trust me, I do my best to get to it as quickly as I can. So if there's ever a day that you send me a chart and I don't get back to you right away, or at all, because it falls way down on the side, I'm sorry. Okay? I can't do anything else but say I'm sorry. Now, once you've mastered Logic 247 and you can draw your own windows of opportunity, then I take you to our original alert service, the Concierge Trade Alerts. Now, they're different than the Logic Alerts. Remember I said the Logic Alerts, they have an entry price, an initial target designed to get your goal for the day, additional targets, and the final trade to target. Well, as you can see, this is a little different scenario. This is where you get to prove to yourself that you actually learned how to read the market via Logic 247. Now, the Logic Alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs are published as a static report every evening shortly after the Globex open. Now somehow, for a couple days in a row, I've managed to get them out right at the open. But don't always expect that. Realistically, over the years, it's been more like 6:20, 6:30, 6:45. And on the random day, it might be 9:30 or 10 because I have a life too. I know it's hard to believe, but got a life and a wife. Anyway, the first thing you do when this report is published, go to the 30-minute charts of whatever markets you actually trade. Make a note on that 30-minute chart where price is at the time the report is published. If the report was published at 6:20 p.m. Eastern, then you would make a note on your 30-minute chart where price was at 6:20 p.m. Eastern. In this case, it was right at the open. Okay. Now that number, that price is always going to be between these two numbers. Okay. Once you've made the notation on your 30-minute chart, draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is simply the green line you see on all my charts. You'll see it on my daily chart. You'll see it on my 30-minute charts. All alerts, logic, and CTAs are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose that fit me years ago. And if it ain't broke, leave it alone. BBC stands for Bull Bear Cross. No matter what time frame you apply the BBC to, if price gets above the green line, you should anticipate higher prices. If price gets below the green line, you should anticipate lower prices, always relative to whatever time frame you're looking at. Daily, weekly, monthly, 30-minute, 5-minute tick chart, range chart. Works the same. Now this is where you test your mettle. This is where you look left to spot these windows of opportunity, targets, obstacles, whatever term you want to give them. And you start to learn how price behaves at a weekly trading zone. This is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is above the 30-minute BBC, it's trying to get to the weekly zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the weekly zones for our members since December 14th of 2009. So we're closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple. Get your goal for the day. Now, again, remember, all of our members and trial members had these targets. Every one of them. Right at the market open last night. Okay? All right. Now we'll go where we always go at this time, to the daily chart. So, interesting things. We've had 1, 2, 3, 4, 5, 6, 7 consecutive new all-time highs. That's 7 trading days in a row. Today, however, see, each one of these highs is higher than the day before until today. Now, there's still plenty of time left in the day. But the current all-time historic high is 57.1875. See the pop-up? High, 57. That is the all-time historic high, the S&P 500 E-mini. Okay? Now, where we found resistance these last few days is at the 62% fib extension. Now, yesterday when we put in that new all-time high, look where we closed. We closed back below the 62. Earlier today, we had just a daily doji centered right on that 62% fib extension. Resistance obviously is at the high of the day and the high of yesterday, the all-time high. We've already come down to touch support at the step line in blue and climbing. And then below that, if we break below, then the next major support is at 56.57. And then below that, 56.18. Okay. Now, I'm looking at a daily chart. Institutional traders, the ones who have account sizes so vast that they actually move price when they trade. They look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. They trade in the incredible size they trade in, it moves price. So, if you will train yourself to spend 2 minutes with the daily chart of whatever you trade, it doesn't matter. It can be futures, it can be individual stocks, it can be crypto, it can be Forex, it can be ETFs. You're literally looking over the shoulder of the guys who move and women who move price. Some days, there's a whole lot of clarity. Some days, there's indecision. Now think about it. Yesterday, after putting in that new all-time historic high, we could not close above the 62% fib extension. All of these days where we found resistance, we have yet to close below, we've yet to close above the 62% fib extension. We've spiked it, okay? And right now we're sitting above it. So if we were to close right now, this would be the first day that we closed above the 62% fib extension. But after this sell-off and this sell-off, I'm going to reserve judgment. Now, again, I look at the daily chart, not for the purpose of trading, but as a fact-finding mission. I want to be able to see where major support and major resistance is. And quite often, you can't see that on your 30-minute chart, your 5-minute chart, your tick chart, or your range chart, okay? So go here for just 2 minutes before you start trading. Jot down the key numbers, right? So we know the high of today is 57.14 and a quarter. We're currently trading 57.01 half. So if you start getting buy signals, okay, just know there's major resistance there. And if we get through that high of today, now you got to go look at the high of yesterday. All right. Michael should be here, probably in another 5-10 minutes. So maybe we'll get through all of these before he shows up. Starting with the ES. When price rallies up to a weekly trading zone, we expect resistance. When price drops to a weekly trading zone, we expect support. Support will always send the market looking for resistance. Resistance will always send the market looking for support. That's true across all markets and all time frames. Now, here's where we opened last night. It was when this candle opened at 6 p.m. Eastern. That's when the targets were published. Now, We consolidated along the BBC for quite a few hours. Then we dropped below it, and blue and climbing turned to red and falling. And we dropped all the way to the zone below where we expect support. Now, could you get your goal for the day on the way down? Sure. Okay. 56.84, 56.74. The zone is 73/74. That's 10 points. But as far as the short target goes, you would not attempt to trade to the short target until price actually got below this zone. Why? Because when price drops to a zone, we expect it to be support until proven otherwise. When the market finds support, it will go look for resistance. The pullback to the BBC, whether you're pulling from above or pulling up from below, the pullback holds more often than it doesn't. But we know eventually price will trade through the BBC. That keeps the markets fluid and tradable. So right here, we traded through. We had the perfect stack on the open of this candle. This candle opened at 56.89.75. So we dropped from 89 to 74. You can do the math. Okay? Now we teach you to just get your goal for the day. Michael teaches you a mechanical method in the live training room every day. And before you come to me wanting to learn discretionary trading, you first need to understand the mechanical model. You must be consistent in getting your goal for the day. Okay? 2 points in the ES, $100 per contract traded. Crude oil, 10 ticks. Gold, 10 ticks. Dow, 20 points. Okay? Whatever you trade, whatever adds up to $100 per contract per day. I want you to nail that consistently before you come to me and say, hey, teach me how to catch the bigger move. Because even though, okay, we got above the BBC, we started to climb, we're nice, we're climbing. This was a green candle all the way up to here, okay? And you just know this thing is going to the weekly zone, and it did. But before it did, it dropped all the way back down here. Can you stomach that type of a drawdown? Better said, can you afford that type of a drawdown? Okay, so let's get your account size built up so that you have the cushion. Now, this was red and falling, but before the 30-minute candle closed, we were back above. And we would expect that because of blue and climbing and the candle opening above the BBC. Up to the zone resistance, which sent price back to the BBC. Remember, price always reverts to the mean. In our case, the mean is green. It's called the BBC. Bull bear cross. Bullish above it, bearish below it. Okay? So, resistance sent us back to the BBC support, which sent us back to the zone resistance, which sent us back to the BBC support, which sent us back to the zone resistance. This is how markets work. Leg retracement, leg retracement, leg. Now this is an important inflection point. You see today's high failed to take out yesterday's high. We already saw that on the daily chart. So I would like to see price get down to about 56.81 and trade that thing down to 56.79. And if the market has some momentum, ride it all the way down to the zone. Or you can do the smart thing and just get your goal for the day, put the mouse away, and go do what God created you to do. It's your trading business. The choice is yours. The Russell rocket ship. Goodness gracious. Now, we still got another zone overhead, but man, oh man, this thing's been on fire. Now, the Russell 2000, oh wait, this is the Dow. I'm sorry. But it's pretty impressive too, right? Okay. So we opened last night, we consolidated, we dropped below the VVC. We didn't quite make it to the target. Buyers came in early, but there was plenty of room. This candle here, right here, just this one candle, opened at 45.36 and dropped to 44.87. So we're talking 46 points. It only takes 20 points to get your goal for the day. There's 46 points in that one candle, roughly. And then it continued to drop even further. So the market found support here. Buyers came in, pushed us up to resistance. Resistance sent us back down to support. Support then sent us looking for resistance. Now, only 3 things happen at a weekly trading zone. 70% of the time, it's going to be this, consolidation.
Okay.
20% of the time, it'll be rejection. Hey, Mike.
I'm here.
Okay. And 10% of the time, it'll be the slice. Look here, this 30-minute candle sliced through the zone like it wasn't even there. But when it ran out of steam, it retraced the zone it sliced through and then continued in the direction of the slice, hitting the long target, hitting the zone overhead at 48.25. And we've still got one more zone overhead, but notice the step line has crossed blue and climbing. So if we stall out here and start to drop, look for price to come back to the BBC. All right. We'll pick up with the Russell when I come back. Right now, Michael is going to give us a recap of what happened in the live training room. And will you still be going live on TradingView and doing some trading?
Yeah,
Okay.
I'll still do a little trading live too.
Okay, perfect.
Probably not as much, but I still do a little bit.
Okay, and then guys, I'll come back, finish the alert recap, and wrap things up with our good word for the day.
Okey-doke.
Looks good.
All right, here we go. Good afternoon, everyone. Today is Tuesday, the 16th day of July, 2024. Let's go here. Here we go. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com, click on the purple button right here. Right, when you click that purple button, it's going to bring you to this registration page right here. All that we ask for on this page is your first name, your last name, your email, and your phone number. It's 5 multiple choice questions, and then down here at the bottom, if you have NinjaTrader, give us your Ninja Machine ID. If you have TradingView, give us a TradingView login ID. If you have Ninja, you should still take the free trial on TradingView. All right, give us a TradingView login ID, and we'll get your indicators set up to be activated on your desktop. You want to be there when you start the trial. All right. All right. Let's see. We are now. Yes. Okay. So if you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We had a pretty good day today. We got the goal pretty early on. Today, as I said, is the 16th day of July, 2024. We made 19 ticks on the NQ, 32 ticks on the Russell. We lost 8 on the YM. We made 17 on the ES. That put us at plus 427.5 on the morning session. Today it took 7 minutes and 2 trades to get to $3,277.50 with 19 contracts on. And we took a total of 18 trades this morning. So on a month now, that puts us at 4,605. That's over 11 trading days, averaging $418 per contract per 2-hour trading day. And on the year, we're now at $51,690, averaging $394 per 2-hour trading day. We're under 31 business days, averaging $394 per 2-hour trading day. It's actually not 2 hours. It's usually only about an hour. Okay. All right. So, looking in here, and I don't see it. Okay. All right. So, if you were to quit trading, the 2420 blueprint says if you were to quit trading and add one contract per month, then you have to earn $2,000 per month per contract by quitting trading. Sorry, Bert was texting me some stuff. And you add one contract per month. So far this year, you'd be at 7 contracts, right? If you started in January doing that, you'd be at 7 contracts. And if you did it just like me in the room, you'd be averaging $1,513 per hour. If you started in January of last year, like I did, and you did 1 contract per month, you'd now be at 19 contracts. And if you did everything just like I did, 44.9 hours work so far this year, getting the goal for the day, averaging $6,547 per hour for those 44.9 hours. All right. All right. Now, let's get into the actual trades. They're in here. And we'll start out. We traded something on every one of these markets today. We had finally got our purple arrow trade on the ES that we were longing for. And we made some money on it. And I took a trade before the purple arrow trade as well. Made some money on that one. All right, so on the YM, looks like the YM was a little late to the party today. We started out our first trade on the YM we had a trade in here somewhere, I don't know where it is, but our very first trade we picked up 2 ticks. Looks like I didn't know that it. And then here at 9:49, we stopped out on this one. That put us at -8. Then I picked up 2 there to get us to -6. Then I picked up 8 there to get us to +2. And then I stopped out again there to get us to -8. And that is where we ended it with the one. I started the lesson plan and I just got on a roll and I opened a rabbit hole and I jumped down in it and that was it. During the break, there was 1 blue arrow there that didn't work out at all. And that was pretty much it. 1 blue arrow that didn't work out at all. Again, with the purple arrows, you only want to take the purple arrows when the ribbon is spread. Okay. The ribbon is spread. The Russell, we had a pretty good day on the Russell today. We didn't have too many trades, but we had a pretty good day. I'm going to go back to the beginning here. All the way back to the beginning. Here we go. Here we are. Our first trade here on the Russell was right here. We picked up, looks like we picked up 5 on the very first trade. And then the next trade, we had a break even. And then this one right here, we picked up 20 to get us to 25. And then we picked up 7 on this one to get us to 32. And I believe that is where we ended up with the Russell. And you can see there were some more really nice trades in here. Some more really nice trades in here. And blue arrow trades, bar trades, green arrow trades, bar trades. These didn't really go anywhere. This was during the break though. And that was it for the Russell. Again, the purple arrow trades, when the ribbon is spread, that is what you want to see right there. When the ribbon is spread. All right. So we did the lesson plan a lot based on the ES today because I really didn't have anything. This is how I've been running with the ES since. And you see we did get some purple arrow trades in there today too. So let's go all the way back to the beginning of the session here with the purple arrow trades and we'll see how we did because I knew right here was our first trade. Now I thought this was going to be a purple arrow trade, so I had the order waiting there, but then the outer band was the wrong color, so it did not be in a purple arrow trade. It just ended up being a ribbon trade. And then I decided I was just going to do ribbon trades. So I turned the blues on and the purples on. Those are just going to be the ribbon trades, all right? So we took that first one over there. We got +11 on that, and I think we got +8 on this to get us to we got +6 on this to get us to +17. I didn't do any of these blue arrows because I was in lesson plan and I was talking about things. But you can see just blue and purple arrows. The purple arrows were triggering in here, but you want to see the ribbon spread when you get the purple arrow. All right. That one purple arrow that we did take back here that we've been waiting for days on, not that one. The other one that we've been waiting for days on. This one, yeah, it was this one right here. We took that one. Did manage to get 6 ticks profit out of that. All right. And again, this is a 4-tick range. The stop is only 8 ticks on a 4-tick range. Right. You see during the break, there was a purple arrow there. Ribbon was spread, gave a little bit, enough to get the stop to break even. Again, purple arrow here. Now the ribbon doesn't look so spread right there, but if you spread it out, it was spreading out. So that would have been a good trade right there to take to that purple arrow right there. This one right here, same thing. The ribbon is spreading out. It's okay. This one right here, same thing. The ribbon is spreading out. Now, if I had the no trade zone on, guys, we'd probably be in a no trade zone right here. No, I do have a no trade zone on. You just can't see it. And I have the input set to 0.01, where it's usually set to 0.35. Okay, well, with a 4 range, it'd be set to 0.15 is what that would be set to normally. And if I go all the way down here and I put the no trade zone on like that, you see it'd be right in a no trade zone for those. Now, the purple arrows don't care about no trade zones, so I didn't see any sense in putting it on there. But the blue arrows won't trigger in a no trade zone. So when we're looking at these things, as we continue moving forward, if keep it like this so we can go over these individual type trades. I think it's kind of a good introduction to anybody who's new to see that this is what really triggers the arrows. All the other stuff is good to see, but you don't need all that to see what really triggers the arrows. Know what you're looking for in the trade. Anyway, we ended up with plus 17 on the ES. All right, I'm talking right through my whole session here. I'm not gonna have much time to trade. I mean, I'll trade, when I get into the trading part of it, I'll trade until 1:30, like I usually do. So I don't mess up the scheduling too much. And I'm gonna scroll all the way back to the beginning of the session here. Okay, all the way back to the beginning of the session. And wow, that's a lot of bars in there. I just thought I was doing screen by screen. Take forever. All right, so here we are. Our very first trade on the NQ was right here. Now we picked up 7 ticks on that. When we got the goal for the day, we were plus 7 on the NQ and plus 11 on the ES. That gave us kind of an odd number. But picked up 7 on the first trade, then we stopped out on the second trade, and that put us down to minus 13. Then we went along here. We stopped out again right there. That put us to minus 33. Right, and we picked up 30 ticks right there to get us to minus 3. That was good at that. I was just saying right before that happened, we did a nice 30 tick trade to get us back on the board there. And then we picked up 30 more ticks right there to get us to plus 27. And then we stopped out there, brought us back down to 7. And then right over here, I got 12 ticks, it looks like, to get us to 19 on that one right there. And I believe that's where we stopped trading for the morning session. There might be one break-even trade in here somewhere. We started the lesson plan. And you see there were some nice legs in here during the lesson plan, but I was really focused on ES during the lesson plan, so I wasn't really looking at the NQ too much. Look at all those nice legs in there. All those really nice blue arrow trades. Look at them. Blue arrow, blue arrow, blue arrow, blue arrow. Every one of those worked out. Dang, another one right there. You guys remember when I used to talk about how it came back and it hit the ribbon, but it didn't hit the black line in the ribbon before I created the blue arrow? I have to say that every time it did it. Blue arrow. Blue arrow. That one didn't work. That would have been a break even. So this is all in the break right here. It was a huge one right there. That would have stopped out. And that brings us current. And that was it for the NQ today. So we ended up with plus 19 on the NQ. Right? Plus 19 today on the NQ. What did we have yesterday on the NQ? 56. This day before, I think we had a huge number. All right. So let's yeah, all right, I'm good. We'll just get into trading now. So if you have not taken a free trial with us, for the YouTube folks, the folks that are watching YouTube right now, if you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. That is going to bring you to this registration page. Just fill out this registration page. When you do that, you will be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click on that confirmation link, we don't know that you took a free trial. That is not true. Sorry, I just switched into something that I used to have to say 5 years ago. We'll send you this registration page. You fill out the registration page, and give us your NinjaTrader machine ID or TradingView login ID, and we'll set up the indicators for you. We'll enable them for you so you can put them on your charts. That's where you want to be. Okay, I'll put them on the charts. Wait. Sorry, a little short circuit there for a second. Went back to the stuff I used to have to say 5 years ago. All right, so that's how you take the free trial. All right, so now we'll just get right back into trading. It looks like the NQ is about to give us a trade coming up here. I'll be looking forward to that. Let me hit stop on that recording right there. And over here right now on the Russell, we pull back up, we're testing, I'm on the NQ, we pull back up and test the ribbon. And we need a down close over there. If we get the down close, we will have a shorting opportunity. But we need the down close to pull out of the overbought. It's going to be a green arrow if it happens. Could still be a green arrow here. Nope. Black line got into the green. No trade there, but the ES has got one right here, I believe. No trade on the NQ. Okay, but the ES has got one right here. This is a ribbon trade on the ES. Now I know we don't have the slingshot going down here. I don't know why. Double click on this. There it is. All right, we don't have the slingshot going. You're not going to have any kind of an arrow here because we didn't come out of the overbought. But it is a valid ribbon trade right there on the ES. Okay. Now the outer band is not the right color, so you're not going to have a purple arrow. You didn't come out of the overbought, so you're not going to have a blue arrow. It is a ribbon trade, though. We bounced off the ribbon where the black line is in the right color. So it's a 4-tick range. My stop only needs to be 8 ticks on that. I just adjusted that. Okay, my stop is 8 ticks away instead of 10. And the Russell's got a purple arrow right there. The YM needs to pull back over here. So I didn't get the purple arrow here. I'm short right here from this, and it's not stopped me out yet, but and there it is. It's starting to move down now. The yes, here's the trade. Okay, it should get down to right there. That's in Thursday's lesson plan, reading the DOM. That's where it should go down to, 96.50. Right, now the swing low is all the way down here at 95.75, so that's about right. 95.75 is just a couple of ticks below that. Should be good with that. Over here on the YM, we want to pull back up and test the ribbon. We haven't done that yet. And I'll drop this right here. What are the targets on the downside? The first short target is 92.25, so that's way down there. Now, I had created a thing where you can adjust those targets to make them a little closer. All right, I haven't put it out into the production yet. I'm going to throw this at break even now, that +1 tick. And the swing low that every trade, every pullback trade should meet is right here at 95.75. So it should go down to 95.75 at least. All right, this is what it has to do to continue the trend. It's got to go through 95.75. So I would be happy if it goes down to 95.75. 96.75 is where the number was, reading the DOM is where the number was a minute ago. It's now moved down a little bit, 1 tick. But this is what it should do to continue the trend. It's got to go through this number right here, okay, to continue the trend. So as it works its way down there, you know, we'll manage our stop. It just took us out with just 1 tick. All right. Now I don't have the YouTube running right now, but if any questions, if anybody has any questions about anything, then let me open up YouTube because I don't see it. So I'm gonna open it up so I will see it. All right. And Bert, I still have not gotten that. And there's YouTube, that's what I was doing. Okay, so I see the YouTube now, and I should see any questions that come in. All right. This blue arrow here, I need to put in a lower swing to be able to take another trade, so we're not doing anything with that. We did put in a higher swing over here. We have a blue arrow there on the YM that did not go anywhere yet. I am not in it, and I'm tempted to get in it right now. Yeah, I'll just get in it right here. Right, I just shorted the YM on the pullback right here. My stop's going to break even after 4 ticks in profit, and I'm going to lock in 5 ticks on that. Okay, 7, 10, 12, 15. All right, I think I have 14 out of that. We didn't put in a lower swing right there. Did not put in a lower swing. Over here on the ES, we need to get a lower swing there. Over here, this is, the outer bands are pretty flat right there, so I'm not going to take this on the NQ. Right, we had a nice higher swing here on the Russell though, so all that is good. And what time is it? 1:23. So we might get another trade here. We got 14 ticks on that YM trade. We got 1 tick on the ES trade so far. We might still get another trade here. I don't know if we're going to, but we'll be on the lookout for it. Hopefully we will. And this over here right now on the YM, we needed to put in a lower swing from this last one right here. Otherwise that would be a ribbon trade right there, off the ribbon. If we had put in a lower swing from this last blue arrow, that'd be a valid trade over there. Now this green arrow over here on the NQ does need to put in a lower swing, right? I didn't take it because I didn't like the outer bands, but it needs to put in a lower swing and then pull back, and that'll spread out the outer bands and give us a little more confidence in taking a trade over there. I didn't open up this question box. Let me do that. Let's see. There are no questions in that question box. That is all good. All right, we finally got the lower swing over here on the YM. All right, got the lower swing over there on the YM, and I'll move that down and that down. All right, so now we'll look for a pullback there and continue the trend. All right. Well, it's 1:26, guys. So we're just about out of time here, but hopefully we'll get another trade or two. We might get something here on the YM. We need to get into the overbought. We need to test the ribbon, one or the other, to get a trade there. The ES needed to put in a lower swing, and it didn't. The NQ needed to put in a lower swing, and it didn't. So the NQ looks like it's changing directions here. And we might get something here on the YM. I don't really know yet. But we will see in a few minutes here. Okay. All right. Excuse me. We could get something here on the NQ right now. Looks like we're almost there on the NQ. Okay. Does anybody have any questions? I don't see any questions out there. And over here, we need an up close 1925 up to 2325. 2325, and there it is. That's a purple arrow long. It's also a ribbon trade over there on the NQ. Oops. 2325. Just placed that in the wrong DOM. That was so dumb. Okay, there. All right, now I got it in the right DOM. Stop to there, and now we hit +4 on that. And we're out with +4 on that. I totally screwed that one up. Grr. That was a mistake. All right, so we're going sideways here with this right now, and we have a green arrow. Now I took the purple arrow, and the purple didn't put in a higher swing, so I can't take the green arrow. I had messed that trade up completely. I stuck it on the wrong DOM to begin with, and I stopped out on the wrong DOM, but you didn't have to see that. It was a Russell stop out that I thought was an NQ trade. And we're going to wrap it up here in about a minute. And we'll see. So we had one messed up trade here that I got 4 ticks on. One trade over here that I got 1 tick on, and one trade over here that I got 14 ticks on. And could have a short trade coming up here on the NQ. Okay, this will be our last trade of the session if it turns into a short over there. It could be one on the YM too. All right, there it is on the NQ. Here it is on the NQ. And it's not one on the YM yet, but we need 8 ticks in profit on the NQ to bump that stop to break even. Right, 8 ticks in profit is getting down to 1025. 1025 down to 1025, or it could just stop us out at -20 ticks. Hasn't done it yet. Down to 1025. The YM's about to give a trade too. Down to 1025. Get ready on the YM. The ES is about to give a trade too. All right, we stopped out on the NQ. The YM is not a trade, and I am out of time. We're just about to have one here on the ES though. Okay, just about to have one here on the ES. There, we did get one on the YM, right? And this is not a trade here on the ES either. We got a commodity overbought. We hit the black line, and I was only looking for blue and purple arrows here on the ES. The YM did give a valid trade though. Valid green arrow trade that should make it down here in the price swing though. Down to 0.62. Right. That'd be about 20 ticks away. All right. And that's it, guys. With that, I'm going to have to wrap it up, and I'll pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. In case Dwayne's not sitting right there, I'll show you to take the free trial. Go to mytradingiq.com, click on the purple button right here. No credit card is required for the trial. Click that purple button. It's going to bring you to this registration page. All we ask is your name, email, phone number, 5 drop downs. Fill those out. Multiple choice questions. Fill those out. NinjaTrader, give us your machine ID if you have it, and TradeView, give us your login ID if you have it. All right. And that is all that you need to do to get the free trial. All right. So, I can pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If you are ready.
Yes, sir. Recap of the morning session.
We had a weird number this morning. Today it took 7 minutes and 2 trades to get to $3,277.50. 19 contracts.
That sounds more like good than weird to me.
Yes, it was definitely good. It was just an odd number because it was like 7 ticks on the NQ and 11 ticks on the ES.
Well, congratulations. Great job.
Thank you. Thank you.
All right, folks, we'll pick up where we left off, as promised. We're now on the Russell rocket ship. I have not seen the Russell in the time that I've been trading, which goes futures, it just goes back to 2005. I've never seen the Russell put in a performance like it has over the past 3 days. Now remember, the Russell is 2,000 small cap companies. And I've taught you that small cap companies are often faster to react to changing economic conditions than the 500 large cap companies that comprise the S&P 500. So, not an economist or a Nobel laureate, so I just leave it at that. The step line has crossed on the Russell, which means this is now potentially the high of the day. Blue and climbing is directly above price, so that makes it potential resistance. The step line can also be potential support. Should price get below the step line, expect a retracement back to these lows right here, 22.55. And if we get through 22.53, then expect continued drop to 22 or to the VVC. Price always reverts to the mean, okay, like this. Now, you might look at this if you're new and go, well, that didn't hold. It got below it. It held, trust me. And then we got a leg and a retracement and a leg. And that's how markets work. Leg retracement, leg retracement, leg retracement. We are now waiting for the retracement. Am I saying it's impossible for price to go higher and get up to the highest weekly trading zone? I am not. What I am saying is if price takes out this high, then there is potential for price to make it to the highest weekly trading zone on a Tuesday. Unusual, but possible. You have to embrace all possibilities. Now, no matter what happens, the high probability move from here, looking at the structure of the market, is a retracement back to the BVC. But as I said, we've had 3 incredible bullish days, or more than that. I mean, this thing started climbing way back on July 10th. And what's today? 16th. July 10th, we did that. And then we did all that. By the way, these vertical lines separate one day from the previous day. There it goes some more. And there it goes again. This is unprecedented. So, market opened last night right here. This was the opening candle. As you know, I got the CTAs out at the market open. We printed a green candle, but we ran into red right there. Anytime this indicator, the CFMA1, I call it blue and climbing, red and falling. When it gets directly above price, it can become resistance, as it did in this case. And it took price back to the BBC. And then boom. Notice how widely spread. You've got price, step line, blue and climbing, BBC. More than enough for your goal for the day. Leg, and then a retracement to the BBC. It's still trying to climb. I can't put any limits on this thing. I'm not in the business of doing that anyway. This is such highly unusual activity. So, be careful. NQ. Here's where we opened last night. We consolidated at the BBC. We got below the BBC. Blue and climbing turned to red and falling, and it took us right down to the weekly trading zone. When price rallies up to a zone, we expect resistance. Resistance will always send the market looking for support. Support will always send the market looking for resistance. Now, this resistance is right here. See where the step line crossed blue and climbing, and you have the high of that candle? I haven't really taught you guys that, but I'm going to get around to it. Anyway, so from expected resistance, we drop back to the zone. We slice the zone. But then when the slice runs out of steam, what do? We retrace to the zone we sliced through, and we continue in the direction of the slice. And, of course, pull back to the BBC held. Now, it holds more often than not, but we know eventually it's going to trade through. Okay? There are a number of things that can help you determine, is it going to hold this time or not? But you can't know what's going to happen next in the market. I know lots of websites and emails that you get promise you that. Well, they lie. That kind of holy grail cannot exist. It would defy the laws of science, physics, and even God. When God created Adam, he did not give Adam the ability to change the past or to know the future. And the same is true today. Oh, but we got AI and we got algorithms, and so what? Do you know how many traders are currently trading this market all around the world? At any moment, some major institution in the US or in some other country could put in a massive buy order or a massive sell order. And that could cause this market to go through the roof or go through the floor. Now, a lot of traders don't want to admit they don't know what's going to happen next. We proudly proclaim the truth. We do not know what the market is going to do next. But we do know what the next high probability move is. Every time. If you've been with us 2 months, and if you can't look at a 30-minute chart and immediately identify what the next high probability move is, You need to start asking some questions in the live training room. Maybe you need one-on-one mentoring. Yes, you've got to learn how to read the market. It's not words, it's not sentences, it's not paragraphs. It's candles. It's our humble indicator set. It's our weekly trading zones. You've got to learn how to read before I can teach you anything. Okay? So what's the next high probability move? Well, let's see. We're printing a red candle. We're below the BBC. We're below red and falling. I suspect price will drop or attempt to drop to 24.65. Could I be wrong? Yeah. I don't have a holy grail. What was the low of this candle? The low is 2,500. So it was up here, just below this. So you got to let price get below 2,500 and then trade it to this low. But the direction of the market is to the downside. Okay. Now, back on Friday. See, this is Tuesday. This is Monday. Here's Friday. Over here on Friday, we had a bullish cross that led to an extended move. Why is that important? When you have a bullish cross that leads to an extended move, the first time price revisits the area of the bullish cross, it will almost always be good support. Does it happen 100% of the time? No. Very few things do in the market. Does it happen more often than not? Better believe it. So, how many traders out there are looking at Friday's price action to determine what price we're going to do today? Outside of our community, probably not a lot. I'm going to teach you things you haven't heard before, you haven't seen before. And you know what? I don't expect you to believe us just because we say it, no matter how convincing we may sound or how much swagger we have in our voice. I want you to take what I say and I want you to battle test it over and over until you're so convinced that you go preach it. Just because somebody says something doesn't make it true. But when you actually put it through its paces and you see with your own eyes that certain things do in fact happen again and again and again, this is not chaos. I can explain every move. Now, let me say this. Anybody can be a genius with a historical chart. That's not what this is about. This is about teaching you to read the chart live in real time when price is flowing so you know where it's safe to trade and where you ought to leave it alone. What I would do on the NQ, I'd wait for price to get below this cross. It'll probably come down to the bullish cross, maybe bounce a time or two. Then I would let it get down, let's call it 20,400. I would give you an $800 per contract move down to the zone. Well, what if price never gets down there? Well, then you won't take that trade, will you? Right? All right. Crude oil. Okay. This was the open last night. This red candle. We're below the BBC. We have red and falling, so we can only expect that the market is going to move lower until proven otherwise. So we come down to the zone. consolidate. Remember, 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. After we consolidated the zone, we then drop to the target. From there, we continue dropping to the zone, where we consolidate for a number of hours, and then we drop to 80.22. Now, why did the market stop falling here? If you really want to learn how to trade, you'll go to on your chart and you'll go look left and you'll find out why. I could scroll back and show you, but it's time for you to start showing up, doing the work, forgetting about this get-rich-quick crap. Stop letting people steal your money. Now, interesting situation on crude. Price is above the BBC, but it's up against resistance at a zone. It's got blue and climbing below it, so that's good for a continued upward move. But once, twice, price failed here. Actually, it failed here. It spiked it, but look where it closed. All the way back down at the BBC. If we punch through, what's this high right here? 81.28. You don't have enough room to put on a trade there. Let price get to 81.40, trade it to 81.50, you're done for the day. Whether you trade one contract or 100. At one contract, it's $100. At 10 contracts, it's $1,000. Goal. And never ever trade without a hard stop. And don't even dream of becoming a member until you've read all the disclaimers and disclosures on our website. Or before you even look at the spreadsheet, as Michael tells you every day. We do this to protect you. All right, goal. Here's the open last night. We got support below us. Okay. When red and falling gets directly below price, it turns into support because it's probably on its way to becoming blue and climbing. So we close above the BBC. And when this candle opens, we have blue and climbing. Try to keep me out of this trade if I'm at the chart at the moment, because all systems are go. We opened at 24.29.5. Let's just call it 24.30. Up to the zone where we expect resistance, $500 per contract traded. Now, hold on for me one moment. Hold on a second, guys. I'm sorry, guys. I'm dealing with an issue that's got me frustrated. I don't mean to take it out on you. Gold ran up to the zone. Resistance. Sent it back to the BBC support. Sent it back to the zone where it consolidated for an hour and a half. And then it ran up to the target. So we get a leg. We get a retracement. Now look, it came all the way down to touch the zone, which we expect to be support. But the pullback to the BBC held. How can I say that when obviously both of these candles are touching the zone? Because they're also touching the BBC. So yes, we spiked the BBC down to the zone. That's how important the zones are. But we immediately rebounded, pullback held, and now look where we are. And by the way, you're looking at all-time historic highs in gold right here. All right, silver. All right, silver opened here last night and basically dropped to the target. It missed it by a penny, I think. It only takes 2 pennies to get your goal for the day. Silver. I don't recommend silver for new traders. Number one, margins are high, can be erratic. Cut your teeth on, I don't know, the S&P, the Dow, crude, gold. Leave the NQ and silver for once you have your chops, as they say. All right. So, support sends us to resistance, back to support, back to resistance, back to support, back to resistance, back to support. Ooh, this time we got above the zone. See that candle right there? You see that cross right there? That's the thing I haven't taught you yet, but I will when I get around to it. So, resistance will always send the market looking for support. Where did it find it? At the short target. And support then sends us looking for resistance, which we found at the weekly trading zone. And there was a Logic 247 alert to make sure you were able to take advantage of that if you wanted to. Last but not least, the euro. Here's where the euro opened last night. Consolidated at the zone, dropped to the target. Support will send the market looking for resistance. Now, why in the world would that be resistance? Why in the world would price stop climbing right there? Previous bearish cross. When you have a bearish cross, that's when the red line gets below the green line. Bullish cross is when the blue line gets above the green line. But when the red line gets below the green line, that's a bearish cross. Okay? And the first time price revisits that area, what do you expect? Resistance. Is it infallible? No. Does it happen more often than not? Yes. Resistance will send the market looking for support. Support will send the market to resistance. Remember, these zones were published for our members and trial members. Every zone you've seen today was published yesterday morning at 6:15 a.m. Eastern. No matter what happens, they won't change. They are carved in stone for the entire week. One last look at the daily. We're still straddling a 62% extension, which We've spiked it these last 1, 2, 3 sessions, and we've spiked it today. Question is, will we close above it? Perhaps we take out yesterday's new all-time historic high. This is a little fat doji. And honestly, it's not giving you a lot of information at the moment. But the fact that it's green means buyers are still buying. It takes financial commitment for price to rise. All it takes for price to fall is for buyers to hit the pause button on the buy side. Then the institutions that specialize in short selling will come out of the woodwork and do their best to drive price down into the arms of waiting buyers who see a specific price as a bargain. Like if price dropped like a rock right now to the daily BBC, you know I'd be thinking long. Okay. To join our canoe club, become a member today at mytradingiq.com. If you have questions, you can always call us at 949-42-EMINI. You can always send us an email, support@cfrn.net. 9 out of 10 traders fail because they try to teach themselves how to trade, or they read books, or they watch videos on YouTube, and pretty soon all their money's gone and they go back to their job. But the story could have ended differently if they only had a teacher. Now, having a teacher doesn't guarantee you'll become the 1 out of 10. Because no matter how much knowledge we give you and indicators we give you, whether you're going to use them properly, patience and self-discipline, we have no control over that. But I'll tell you this, as a passport holder, you at least have a fighting chance. You're joining a winning team. It's not just me, it's not just Valerie, Michael, and Bert. We have hundreds of traders. You're on a team. And everybody's rooting for you. They want to help you. And they will help you. Along with the live training room, when you become a passport holder, you get private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same. Support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. As a passport holder, you'll get the Logic 247 alerts as they come out around the clock. You'll get the concierge trade alerts when they're published every night, shortly after the Globex open. You'll get the weekly trading zones Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members-only workshop on Thursday night at 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. When it comes to trading, you stand at the crossroads. This could be the most important decision you'll ever make. And for those of you who haven't taken your free trial yet, you have access to all of this for 5 consecutive trading days. Doesn't matter what day of the week or weekend you sign up for the trial. Weekends and holidays don't count against you. You will get 5 consecutive trading days where we will treat you just like a passport holder. We foot the bill so that you can have a clear head and at the end of the 5 days, make a well-informed and intelligent decision. Let's go to our good word for the day. Yesterday, we talked about the power of a power nap. Let's see what we got for today. Still checking. Okay. When you get up in the morning, look in the mirror, what do you see? Some like what they see. Many don't like what they see. But here's what's important. How does God see you? Isaiah 43:4 teaches, and this is God speaking, "You are precious in my sight." Have you ever gone to a yard sale hoping to find a bargain? To the untrained eye, much of the stuff looks like rubbish. It may even have been gathering dust and mildew in somebody's loft. But the trained eye sees treasure in disguise. Items that just need to be cleaned, polished, and restored in order to become valuable again. That's what God does with us. When the enemy tells you you're worthless, the father of lies, God looks inside of you and sees hidden treasure. When you make Jesus the Lord of your life, He enables you to overcome your past, to resist temptation, to conquer bad habits, to rise above your self-imposed limitations, and realize that in God's eyes, you have great value. You actually start believing what He said. You are precious in my sight. Truth is, when you keep putting yourself down, you tend to gravitate towards people who do the same. But once you begin to realize the value God places on you, your entire outlook changes. With God, you can't lose. Even when you stumble, He will help you get back up again. Become stronger, become wiser, and move on to victory. When you see yourself only as somebody who makes mistakes and falls short, you're looking in the wrong mirror. Once you start to see yourself in the mirror of God's Word, you see someone who is being transformed day by day into the likeness of Jesus. 2 Corinthians 3:18. And that's how God sees you right now. That's our good word for today. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy, with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.